Hello, mic test. Right, we're live. Hey, yes. Right. So today will be slightly different. Right. Welcome to the stream. Or to the VOD if you're watching this back. Right. Today will be slightly different from the other. Oh, why did the why does the title keep? Oh my goodness. Okay. Wait. Let me restart the stream real quick. Uh. Oh, I guess another one. Another day. The same thing happened. Oh. Okay, yeah, but for those watching the VOD back at least, because the recording is still rolling, right? Today we'll be doing something different, right? I'll explain it a bit later on. But it is something new that I'm trying to do. So let's see if I can restart my stream. Okay. Alright, stream's restarted. Right, okay. Hopefully my title is updated properly. But yeah, as I was saying, today we're trying something new. Essentially, my student isn't here today due to certain circumstances. Yeah, he's going through quite a bit, so hopefully he gets, his things sorted out as well. All the best for him, right? But yeah, so I can't really progress on, the work because he's not here to learn from it. Sure, he can watch the VOD back, but I really don't want him to, you know, uh, kind of waste his time on an explanation that he might not get. So instead, I decided to start a new kind of series. This one is more targeted towards GCE O levels, specifically the Singapore one, right? So right, without further ado, let's just bring up the question. So yeah, today what we're doing is going through question one of Principle of Accounts, the exam that was administered in 2025, O levels, right? So TYS stands for 10-year series. 78701 is okay. 7087 is the subject code. O1 is paper one. POA is Principle of Accounts, um, and then the date, right? So we're focusing on question one today, and actually there's quite a lot of things to cover. So without further ado, let's just start this, right? Um, so first thing we do when we see a question is actually let's just read part A first, right? What do they want us to do? Interpret the entries in the cash at bank account. So we need to find the cash at bank account, which is what they gave us here, right? So this will be the focus of A, part 1, 2, and 3, if I'm not wrong. Let me see. Yep, part A, essentially. So, now we can read the question, right? Essentially, we have this person called Reza. Um, they are operating a trading business, um, trading business selling coffee beans, right? And this is their bank ledger account, cash at bank, in the month of April 2025. So, well, this really doesn't exactly tell us too much. So let's continue reading, right? First we notice cash at bank account, right, which we noted down. Next is, April 1st. Balance BD. I said before, BD means brought down. Brought down from where? Brought down from the previous month, right? So, it just means that the balance from the previous month carried over, right? What's the next thing we notice? We notice that 215 CR. What does that mean? It means that when it is brought down, the bank account is on the credit side. It's net credit, right? So what does this actually mean? So if we look back at the accounting equation, right? Sorry, pardon the sounds. Okay, let's look back at the accounting equation, right? Asset equals to L, liabilities, plus equity, which is E, right? Did my title seriously not update? Oh, come on. Oh, all right. Well, it's fine. We'll roll with this. Come on. Okay. Right. So we classify, we try to classify cash at bank. So how do we classify? A and E are more straightforward, right? Asset is both have the same or similar prerequisites basically. Both have to come from somewhere, right? So history, that's what I like to say, or there is a story behind it, right? So it has to come from somewhere somehow. You gotta have acquired this asset somehow, or you have taken on this liability somehow for whatever reason, right? The second, which is the main defining factor of whether or not we can call something an asset or liability, is number one. Number one is history. Number two, asset would be uh future benefits. It, this is a very simplified approach. Okay, so the proper terms are, I'll let you guys read your own accounting standards. Right, if it says otherwise, please follow whichever country's accounting standards you're supposed to follow. Right, this is just kind of the one that I was using, and I simplified it. Right, L is future liability is future outflow or future loss, disadvantage, whatnot, right? And then E, equity, is uh where you can't classify under an asset, or you can't classify under liability, right? So you can't classify into either, then you throw it into E and pray that it's correct. Right. So now that we know, right, what is cash at bank? Right. Imagine your bank basically is a bank account, right? You have money in your bank account. So how did your money get there, right? If you ask a proper working adult, how did your money get in your bank? They'll probably say, yeah, I worked. I got salary, um, and that's how I got my money in the bank, right? So that is the history, right? Man put in his hard work, labor, blood, sweat, and tears, uh, to earn that amount of money in his bank, right? So that's how the cash appeared there. So it has a history, right? And what can you use the cash for? Well, you can use it to sustain yourself. You buy food, you buy house, things to keep you alive, basically. Or you can also invest it, right? You buy stocks. Um, you invest in yourself by taking courses, learning new things. You can spend it on entertainment, buying a new computer, these sort of things, right? So it's all in the future, right? I mean, right now your cash is still in your bank, but in the future you could use it for other things, right? And future could mean literally the next second, right? So after phrasing it like this, cash at bank seems to sound like asset. And for those of you who thinks that, yeah, you're correct. For those of you who are still a bit confused, don't worry, it's perfectly normal, right? This comes with a bit of practice, so hopefully if you practice a bit more you can kind of get it. And honestly find your own way to explain this to yourself and to others, how you know why do you think a certain account is this, right? But first we need to get it correct, right? Then we can build explanation on top of that. So cash at bank is an asset. So this is A, right? Asset. So now we ask ourselves, right? When you debit or credit an asset, does it increase or decrease, right? So for me, the way I like to remember it is, of course, I go with the opposite way, right? I think about liability, right? So I think about credit cards, because the easiest for me to remember, and it's something that most of us use, right? So what does credit card mean? How does it work? Essentially, what it does is you pay later. You get your items first, right? If you are grocery shopping, whatnot, you buy your groceries first, right? And then you pay the bank later. So the bank essentially covers for you, right? Then later on you pay the bank back, right? So if we look at it, it's a future loss, right? Because you gotta pay money in the future, right? It's a history because you bought groceries on using the credit card, and that's why you have to pay them back later, So this is a liability, right? And credit card has the word credit in it. So does debit card, but both explanation will work. You arrive at the same conclusion. I just prefer credit card, right? Um, so in order for liability to increase, you say credit card, right? Increases your liability, and then the opposite is true, debit. So everything on the other side of this equal sign, A equals to L plus E, right? Anything on the opposite side has the opposite polarity, right? So now you can deduce it, okay? And then what do you do? Well, and then you see, your cash at bank is an asset, right? If it is a positive number, it's supposed to be debit. But what do we see here? On 1st April, 215 CR, which stands for credit, meaning that you owe the bank money. Okay, so this is what they call an overdraft. All right, this is what they call an overdraft, meaning the bank allow you to spend more than what you have in your account with interest, of course, right? And this is what they call overdraft. It is actually a liability, right? It is a liability until you have enough cash in your bank again, which is what happens later on. So what happens on 2nd of April? This is we're going into the question proper, all right? So 2nd of April, you notice that there is one account called trade receivables. I'm gonna write TR, right? And then your bank, cash at bank, I'm just gonna call it bank, right? These are the two accounts. So what does this row actually mean? It meant that sorry. Oh my. Okay. Sorry, my throat got a little fried. And this should be what this means. Let's think about this real quick. Okay. Yeah, this is an interesting question, right? So what happened here is that you credit your bank account 895, right? This is why you notice that your balance actually increased in the negative direction. It became more of a debt, right? And you paid it to your trade receivable, right? So what could this mean? Okay. There are a few explanations, but let's see what the answer key actually says. I am not entirely sure and don't want to say the, you know, uh wrong answer. Hmm. Okay. Interesting. Okay. So what this says was that basically um this trade payable this trade receivable tried to pay you, right? And it was rejected basically, right? For what reasons it was rejected? A few that are quite common. One would basically be the trade receivable, Tasty Snacks here. They did not have enough money to pay you at that point in time. Then the bank would just reject it, right? Because why would a bank do this sort of charity? Yeah, they have no incentive to cover for your debt, right? So that is one of the reason why. Okay. Um, but yeah, essentially that was what the answer key said. Uh, any other reasons? Technically, there are few, but they are rare, right? The one that I was thinking of probably is wrong, right? Is you actually paid the trade receivable for whatever reason. It could be a refund, but a refund would just decrease trade receivable instead. So this doesn't make sense, right? Um, actually, yeah, correct. Sorry, when you do a refund, it's a different thing. It's not this, so it's not a refund, right? Um, So yeah, I really do not know this answer. They did say that it is because of a dishonored check, meaning that, the essentially the check did not go through. And the thing about checks is that, sometimes the company, so for example, Riza, right, they will record the cash coming in before the check is actually cleared by the bank, right? And then this will be the result if the check bounced, right? So yeah, that is the explanation I could think of, right? I am not too familiar with this part of the question, but it's okay. We learn from this. I'm also learning from this, right? Okay, let's look at part 2, 14th of April, right? So what happened here? Well, your inventory and your bank are the two accounts being affected here, right? So oh, I need to write debit credit on this side. So these are the journal entries, okay? It's not necessary to write it out actually because it's already written in the question. I just writing it out because it's easier for me to refer to, right? 1760. 1760. Okay, so what does this actually mean? Your inventory increased, right? Because you debited inventory, and your cash decreased even more. So what scenario would cause your inventory to increase and your cash to decrease? Well, you bought on, you bought using cash. Uh, Purchase in cash, right? Because if it's purchase on credit, meaning that you tell your supplier, hey, I'll just owe you this amount, I'll pay you back in the future, it won't be bank at the bottom. It won't be cash or bank at the bottom. It will be trade payables, right? But because your bank account decreased further, it just means that you pay in cash, right? And the bank is covering for you, but charging you interest, right, for it. Okay. All right. Then we look at the next question, which is 25th of April. Cash in hand. So the accounts involved are cash in hand and bank. Okay, why do I actually credit bank? Well, because all these entries uh is written in the credit side for the cash at bank account, right? So this is why I credit the bank. So what does this mean? It's $75 each. Well, this actually means you got more cash on hand, meaning if you can imagine in your wallet, right? You got 75 extra dollars in your wallet, and the balance in your bank decreased by 75, right? So what would this mean? It just means you drew cash from the ATM, right? So yeah, that's it. So this is withdraw cash. Okay. Most of these I'm not actually referring to the answers. I probably should, but I feel like I should actually keep the momentum going. Okay, so we go to part B, right? Let me zoom out a little bit so you guys can see the full thing. Right. So they say complete the table by putting a tick in the column, right? So whether or not these are true or false. So John Cafe supplies goods to Reza's business. So who is John's Cafe? We look back at the question, right? John's Cafe, it says trade receivable, right? So trade receivable usually it is when you sell items to them, then they owe you a certain amount of money, right? So it should be the other way around actually. This should be Reza supplying to John's Cafe instead. Oh, whoops. Sorry. So it's false, okay? Reza's business sells good only for cash. Well, that's not true because you have trade receivables, meaning people put, whatever payments on hold. So you are not selling only on cash, you're selling for cash and on credit. So and on credit. Therefore, it's still false, right? Cash at bank balance on 1st May showed an overdraft. So let's look at 1st May. 1st May is here. Okay, maybe I should use a different color. Actually I just write down the question number. So this is B. Yep, B. Okay. So 3990 debit. As we've established before, asset, if you see a debit balance, means it is positive. So show an overdraft. Overdraft is, as we learned before, it's a liability. It's also kind of negative cash. That's not the right way to say it, by the way. You have to call it overdraft, right? So it's also false. It is actually positive. It's an asset, proper cash in the bank. So this is your answer for B, right? And then, okay, we move on to C, segregation of duties in relation to dealing with cash in a business. So what is segregation of duties? Essentially, there are a few roles that people take up. One would be custody, right? They are custodian to the asset. The next one would be authorization, right? The last one is actually sorry, let me think about it. There are actually two to three to four. But the one that I learned back then was only three, right? The last one is actually recording. So what does this actually mean? Custody means you safekeeping. Authorization is allowing the use. And recording is just to record the use. The use or record received, receipts. Right. So what does any of this mean in cash? Okay. Custody of cash. Usually we delegate it to the cash register. If you've seen one before, you know what I'm talking about. And the cashier who knows the password of it, they have a key, whichever that they use to control it. Basically, the people safekeeping the cash, right? So if you're talking about yourself, you are custody of your own cash, right? You carry your if you are carrying your own bank cards, right? Your debit, credit cards, you carry cash in a wallet, right? If you have the wallet on hand, it means you have custody of it, right? You have custody of whatever money that's inside. Authorization is the allowing to use. So usually it's done by a signature, right? Because it's written and it's very clear and it's difficult to forge, right? So this is why we use signatures to indicate agreement, like that we've seen it and that we're allowing it, right? Sometimes we even write like approved by whichever person's name and signature. Yeah, just to make it more formal, just to make it more concrete, right? In daily sense, what does this mean? Well, I don't know if you guys use bank apps or SMS codes. When you make a huge transaction, sometimes they'll require you to key in your 6-digit PIN, they'll send you an SMS and all that stuff. Yeah, so that is essentially authorization, right? You're approving the bank, you're telling the bank, hey, it is me, right? I'm doing this, I intend to spend this money, let the payment go through, right? So that's what authorization means, and that's what usually we see in the day-to-day life. What about recording? Well, usually we don't do it, if we're just a layman, right? But, once a month or like once in a blue moon, sometimes you bring out all your receipts and then you really write it down and see how much your bank account has decreased, and then your heart breaks, right? That's recording. Essentially, you're just keeping tabs of what happened, right? And what you have now. So, segregation of duty essentially means that you cannot allow one person to do all three, or even two for that matter. In order to be safe, you need different people to handle each role, right? And this is extremely difficult in smaller companies because they have lesser manpower. They can't afford to do this, right? But obviously, best practice is to follow it strictly, right? So, what does it mean in relation with dealing with cash in a business, right? Well, the easiest one will actually just be using check, right? So, custody of the money, right? Usually the person holding on to the check could be one. Um, the person writing down who to pay could be another one. Yeah. Maybe check isn't the best idea here because I realize that sometimes you can confuse it with authorization, which is honestly pretty normal. It's difficult to really separate these roles, which is why I think it's also very difficult for companies to do it, right? Um, I mean the easiest one would just be cash at bank, I guess. All right, cash at bank. Let's go with this one. Cash at bank. Okay, custody. Well, who really has it, right? Could be the person holding the card, right? Um, the authorization, could be person with those physical tokens where they'll give you a 6-digit pin as a person holding the token, right? And then last but not least, we have the recorder. Recording the accountant basically, right? Bookkeeping person. Okay, so bookkeeping is slightly different from accounting, but it is under accounting, right? As a subcategory. Essentially, it's just recording down all the transactions, debit, credit, which accounts, all that stuff. Yeah. And then, yeah, that is how I will answer this question. I might have gone off point, but so be it. uh, okay, I should probably mention this. The goal of this isn't to give you the perfect answer. The perfect answer is in the answer booklet. And I strongly suggest you buy the book itself to do the questions because just listening to explanation isn't going to train your writing speed enough to finish the exams properly. So please at least try the questions under time constraints, right? If you're preparing for this exam, please do that, right? Explanation is just there to, you know, really clarify certain things, right? If you don't understand something, hopefully this explanation gives you, a clearer light, a different perspective, something that you can relate to instead of just looking at the answer booklet and being confused, right? So my role here is just to clear up confusion. My role here isn't to handhold you, feeding you the answers, because the answer booklet can do that for you. All right. So I should have mentioned that at the start, but I'm gonna say it now, right? Please go and practice this question, and if my answers are wrong, um, then you can choose to disregard my explanation. Okay. All right. So moving on, question part D, right? Um, they want us to explain the purpose of preparing a bank reconciliation at a regular basis. Okay, so I gotta explain what bank reconciliation is. Okay, essentially, every month, okay, regular basis usually for big companies is every month, right? You have something called a bank statement. What is that? It is essentially just the bank telling you, hey, these are the amount that we have recorded on our side, right? And then every month you have your own one, which is in your general journal, your cash at bank account. Okay. And this is what the company records. right? So there are certain transactions that will cause a mismatch between the two. And bank reconciliation is to actually help you identify exactly what is causing the difference, right? And then you know, if you can identify everything that is different, then you can explain it, right? You can explain exactly why we have a difference, right? It's not because you have some cash missing, which is a big deal. It may mean that someone is misappropriating funds, maybe, right? Or you just lost the money somehow, right? Or you just failed to record a purchase, right? So the purpose is actually uh, fraud detection, right? You have to account for all the money that you have, and also like you know you have, and also the bank knows they have, right? So we can see it in a proper bank reconciliation, which I'm not going to do here, right? Um, but like when it comes down to it, it's just to make sure that you know where your cash are, right? The bank don't really care, right? The bank just tells you how much you have in the bank, right? The bank doesn't really care. But you need to care, because you know, what if some of the cash is actually missing, right? You don't just have a check that is floating, that is uncleared. You know, you actually have someone spent the amount, did not record it, and it's intentional. Okay? Fraud is only defined by intention, actually. If it doesn't have the intention, it'll just be called a mistake, an error, right? Okay. So it's either a fraud or a mistake, right? But if you can manage to do the reconciliation properly, then you know where your cash is, right? And then you can explain to your manager, you can explain to your higher up, oh yeah, why is our book amount different from what the bank says we have, right? That is essentially it. And on a regular basis, it's just to make sure that, you know, the chances of you detecting it is higher, because the more transactions you have, the harder it is to keep track, right? And also, um, is really also to dissuade people who want to do it, right? And yeah, because if you do it regularly, you check regularly and do it properly, people are less likely to do it because it's risky for them, right? What if they get caught? They'll just get, I think, thrown into jail, to be honest, if it's a proper fraud case, right? But yeah, consequences are pretty severe for fraud. So yeah, think twice before you actually do this sort of things. Please don't ever think about it. It is never worth it. Okay. Right. Okay. So we're done with question D, kind of. Again, if you want the proper answer, please just buy the book and do the questions proper. Right. One is to train the way you think. Right. You can practice on a question. Oh, I see this question. What is it asking me for? What steps do I need to take to answer this question? So this sort of things, I try to go through with it, like go through with you on stream and all that, and also on the recording. But again, uh, knowledge doesn't work like osmosis or active transport or diffusion, right? It just doesn't go into your brain and stay there like that. Unless you're some kind of genius, then you probably don't need to watch this video. But it's okay, right? Um, but yeah, other than that, yeah, really, just go and practice the exam questions. They'll help you out a lot, especially for um more beginner level, foundation level exams. Um, Proper practice makes perfect. Right. Okay. Part E, explain two examples of internal controls over cash, other than segregation of duty and preparation of the reconciliation. Right, internal controls. Let me explain what those are first. Okay. Internal controls are actually a safety feature. You can think of it as a safety feature built into your accounting system. What do I mean by that? Okay, if you guys look at your house, do you notice something called a circuit breaker? You know, those things that automatically shut down your electricity if, you know, they detect something dangerous, you know, that could cause a fire and whatnot, or even like, yeah, basically those things. It shuts off your electricity, and it is a safety feature. It's a built-in thing that kicks in automatically, right? Those are the equivalent of internal controls in a business. So what that means is that it's built into the system to directly, you know, minimize the chances of a mistake or fraud from occurring, right? It can prevent people from committing crimes, and it's built into the system, right? And its strength actually depends on a few things, mainly whether or not people can actually override these controls, right? So things like if the director can just override the controls, then or the managers can just override the controls, then it's not exactly very strong because it only keeps those who cannot override it out, right? It doesn't prevent certain people from overcoming these obstacles and doing the deed anyways. So yeah, those are internal controls. Examples of internal controls. Okay. Um this is not really accounting, right? This is more business related now. And to be honest, I'll illustrate with a more I'll say personal approach. And you can see how it's applied to businesses, okay? For example, you have your own personal computer. You have certain files that you want to protect, right? You zip it up, you put it in a zip file, and you put a password on it, right? That is a form of internal control because only the person with the password can actually access it, right? Of course, you can say, oh, hackers can do all this stuff. That is true, and it also applies to businesses. You know, they can get hacked as well. Yes, but the base is password protection, right? It keeps certain people out because if you don't give them the password and your password is strong enough, they probably won't even bother trying to crack the code and get in, right? That is one form. The other form is, again, we said before, segregation of duty, right? You only allow certain people to do certain things so that no one person has too much power to make a certain decision and allow it to go through, right? Um, Example would just be, let's say the company has a safe that has a lot of gold inside, emergency funds, right? Um, a person could have the key, right, the passcode to the vault. Maybe the other person has the key to the room of where the vault is kept, right? So that will prevent people from, well, not prevent, it'll minimize the chances of, both people deciding at once to, join up and go in to steal the gold, right? Um, that is one that I could think of, right? Uh, Maybe instead of gold, it could be sensitive company information, right? Like your trade secrets, all those stuff, right? So the whole point is to prevent one person from gaining too much power or control over certain things that you want protected, right? So you have multiple people to protect them. Uh, an analogy would just be open source, right? If enough people scrutinize the code, then the code is deemed safe enough, right? Because if enough eyes look at it and say, yeah, it doesn't seem like there's a problem, then high chance there isn't a problem, but it's never foolproof. Same as here, internal controls are never foolproof, right? But they are there to minimize the chances of anything bad happening. Okay, so hopefully I have given enough examples, illustrating what exactly are internal controls. Okay, and over cash, I don't really have an answer for this. I'm gonna read the answer out. Okay. Uh, Again, theory isn't my strong suit. I can't memorize certain things for the life of me. To be honest, I don't even know how I passed. Because theory is such a big portion of, this sort of things. But here I am, uh, trying to, explain this sort of things. So it's a bit nostalgic, yes. Right. Oh, okay. Uh, I don't know if this answer is proper. It doesn't seem proper to me. Okay. I won't use it. It doesn't seem right to me. So if you think that the answer is you can live by that answer, go ahead with it. I am not reading it out. I don't think it's correct, but again, it's up to you guys to judge. Okay, I believe you trust the answer over me. To be very honest, right? I'll try my best to answer this actually. Two examples of internal controls over cash. Other than segregation of duty and preparation of the bank reconciliation. Mm, I'll say, oh my. Um, Let me think. Well, I mean, cash register is one of them, right? Uh, it's an internal control in itself because it physically blocks people who doesn't have a key or the passcode out, right? That is one. Um, the other one could be well, that's somewhat similar to in segregation of duty as well. Yeah, I think the is either the question isn't phrased properly, uh, or I just am not thinking of something, because the answer I read it, it just looks like segregation of duty to me, right? That's why I say I don't want to read it out. But again, if you bought the book and you saw the answer and you want to follow it, then go ahead. Uh, I won't stop you, right? Um, yeah. To be honest, this is a tough one. This is a tough one. Uh, well, I mean, people keeping cash is just like custody. People authorizing it would just be, people agreeing that we should spend cash on this, maybe. Bank reconciliation covers on most of the month end differences. Yeah, the one I can think of is cashier. I guess is a built-in manual control, right? Um, Maybe digital control. Uh, if you're using a banking app, right? Because nowadays most of these are digitalized. Um, I guess the bank app itself is a control, right? Because it's password protected. Um, you know, maybe right, yeah. So if you're using those, right, then the other one would be the bank app. They have a limit, those daily limit on how much you can send to other bank accounts, send to other people. Yeah, that one would be internal control. Uh, because you can set it at a certain amount, and then those people have to get proper authorization in order to send anything above that amount, right? That could apply to not just bank apps. It could apply to anything. Like if you want to purchase something for your company and it's above a certain amount, right? People can do things like so this is what I've seen out there, right, in companies. So less than a certain amount, you can just authorize by, let's say your junior manager, right? Uh, between sorry, between XX and YY, you need maybe a higher level personnel, right? You need a senior manager, right? And then anything above YY, you need the director for approval. This is an example of internal control. Uh this is an authorization matrix. Oh, where did my okay, there we go. authorization matrix, right? So this is one form of internal control. The other one would just be, um, a physical one, right? Like the cash register. Could be a safe, right? All that stuff. Um, this would be more of administrative, right? Administrative. It could be either manual or digital or both, right? It depends. And there are full digital ones, which is the bank account. So I'm gonna say okay, cash register slash safe. These are considered manual because it's a physical item, right? And then last but not least, we have okay, admin can be manual or IT, right? And then the last one would be the what's that called? Transfer limit, right? You tell the bank, I refuse. You should refuse anything above this amount, right? Any transaction that's above this amount, right? This will be IT, right? So it's fully run by the system. You don't need any manual adjustments to do this. So yeah, that is the end of question one actually. This is a rather lengthy video. I'm sorry it's a bit long, but um you can probably see I tend to over explain certain things, right? Go out of point. Uh my goal isn't to answer just the question. My goal is to make you guys well, sorry, not make you guys. That's too much. It's to give my point of view, right? What I think about how I should answer this question, what I think about this scenario, right? Um, Hopefully you can appreciate it. Uh, and hopefully this helps answer some of your queries when you're confused and whatnot, right? If not, yeah, this is the end of the lesson. Hope you guys, if you're watching the stream, I hope you guys enjoyed uh, this part, right? Do stick around for other content if you want. And those who are watching the VOD, thank you so much for making it to the end. Same as those who are watching the stream, right? Again, if you have any questions regarding this or any other content that I upload, other than the gaming ones, okay, the ones that I'm actually teaching, uh, please just you know reach out to me, right? Go to comments, type in the live chat if I'm streaming, uh, drop the questions in, right? Um, because I don't know what you don't know, right? And I can't really tailor my explanation to every person because I don't number one I don't know you, right? I'm just trying my best to give examples that are more generic, more widely recognized, right? But if it doesn't work for you, know that this is perfectly fine, right? It's completely valid. So if you are still confused, do send a message, right? Leave a comment on YouTube, type in the live chat. There is an anonymous form that you could fill up as well. It'll be sent to my um, work email. I'll read it and see if I can answer it, right? If I can't answer it immediately, I'll probably create a whole supplementary video, upload it onto YouTube, right? So yeah, really, uh, the best way to learn is really to just ask questions, and if I can't answer them for you, I will let you know. Okay, I'll be very honest when I cannot answer a certain question. Okay. Alright, other than that, that is all from me. I'll see you guys in a bit. I'll be uploading this video soon. In the meantime, if if this is your weekend, really take care, rest well over the weekends. Yeah. Bye bye.